I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today, the market started off a little bit weak. Actually, pre-market was weak, and then we had those retail sales numbers that were pretty strong, giving us some more clues that the economy's getting a little bit better. We saw it in the jobs report. You see in the retail sales numbers. Everyone's going to pick them apart and think like they're smarter than everyone else out there and say they're not real, they're not this, they're not that. But meanwhile, the numbers are getting incrementally better. Some people out there will say, oh, but look at the good news and we're only up peanuts. But we also have come a long way into where we are now. And we actually wound up rallying on a lot of bad news during the course of this trend, so to speak. So now that some news, some good news comes out as, maybe QE's working, maybe it's not, whatever you want to call it or whatever you want to think. The market's not going nuts, but it's still digesting well. And if you go to the chart here of the Dow, you will see, first of all, actually no, SPX first, here is the move that started the year. So again, even if you missed this move to start the year because you were all worried about the fiscal cliff and worried about everything going on, you then had some time as it digested for these 5 days above this downtrend. So if you wanted to get involved in your stocks, this was your time. And then look at the 8-day. Okay, from here, we had a really nice methodical move all the way to finally the 8-day broke, and so did the 21-day. All right, but this little correction right around the Italian elections led to nothing. All right, this was a small pullback. We held above the 50-day. You had a little bit of a red dog reversal, which I could show you in the spiders. Right back up to the old resistance. And then what happened here? We held higher. So even if you took risk off on this wide range bar, because I took some risk off here, guys. I think I might have even been net short that day. Ooh, imagine that, net short. Okay, on this day when we came off from the highs here of about 1530 down to as low as 1485. Made sense, about 40 handles off the highest to at least cover and figure it out. And here was your reversal. Quick move back up. If we were going to not go up any higher, this is where we probably would have held. That would have been, telling you that this bar had power, but this negated it. So with that said, in these 4 days when we were holding higher, if you got out of your positions or you paired down here, this was your spot to get back in your positions. This was your spot to say, okay, let me be flexible. Let me get back to whatever I'm comfortable holding. And then you had a breakout. You remember we talked about this 1530. That was your breakout above 1530. It was very clean, closed strong. And then from here, methodically going higher. And then recently on Twitter, I've been putting in the 60-minute chart of to say the spiders to show you where the floor has been to see what the complexion is like. Okay, and if you look here just on the spiders, which correlates the same way to the SPX, if you don't trade futures and you'd rather trade the spiders, here is that break above 1530. Here is that red dog reversal where it made a quick low below the prior day low here at 149, only went down 27 cents. So that was your stop for what has really been a pretty clean move. So anyway, this has been your 3-day floor, okay, that 155.20-ish. I think that's what we said, 20-ish. This one went to 23. This one was 21. This low here was 13. So this was your area that held. So when you go sideways for a few days, sometimes that's the correction, guys. Okay, we don't know yet, but at this point, things are still acting pretty well here. So now you want to go back to the SPX and see the monthly chart. You go back to the monthly chart and we're knocking on that door. I've done this presentation now so many different times about the double top here in the S&P. Here's your 1551, here's your 1573, and we're knocking on that door. More importantly, we talked about the roaring 80s, which you saw a huge move, and then the go-go 90s. And although this decade has been tumultuous for some who don't time the market, who just sat there, it wound up being a decent decade where it absorbed 2 decades worth of gains. Okay, here is your downtrend. Look at this channel. If you're a channel trader, you could have rode this all the way down before you had a nice little W right here, and then that's when it switched. Then you had a really nice uptrend, okay, that broke, and that was your double top, and it went down even faster than here. Okay, then you had a V bottom with an outside day, okay, on the monthly, look at that. And then from there, higher, here's your bottom, here's your higher low, here's your higher low, here's your, here's your higher low, all the way up to now where we're knocking on the door. So the question is, when you knock on the door, do they let you right in? Do they keep it bolted shut and you see some resistance here? Or do you storm through? Kind of three scenarios, kind of like I painted the picture back at 1530, which was the highs, over here on the daily chart. What was it going to do? We could have, went back to 1530 and knocked on it and failed. We could have went back to 1530 and pushed through it and failed, or we could have closed strong and then had continuation. Same way here. Remember earlier in the year we talked about 1474. How were we going to handle 1474? That's what we put in the 2013 thesis. If we get through there with some power, we're going to see 1500 pretty quickly. Well, not only did it hover right in front of it, it knocked through the door and didn't look back. So this is the next door that we're looking to knock on, and we'll figure out what goes on here. But ultimately, even if we do pull in, I think that it's going to be minor, it's going to be viable, and I am a full believer still in the road to S&P 1700. I've said 2015, might happen sooner. You had Tepper on today, fast money, and he's still bullish. I love that guy, by the way. I was sitting at my desk that morning, when he came on and he did the, flip a coin, heads I win, tails I win, because of the Bernanke bid. But he also bred confidence into the market when everyone else was fear-mongering. He said, I'm buying stocks, I'm buying U.S. equities. He told everyone what he was going to do, and that's when the market changed. So I like it when a guy, approaches the market with a constructive approach instead of fear-mongering and says it like it is. And, at this point, I still think we have higher prices. It's just how you navigate it. And today, there was some action. I wouldn't say there was blaring, unbelievable action. But, we talked about, off the charts, we talked about Netflix. Okay, you look at Netflix right here on the daily chart. Talked about this 185-ish, okay, 186 was in off the charts. It opened there. Some guys cheated and got a little long, probably overnight because it was, getting tight, and we said something's going to happen soon. And if you cheated to the upside, you got, rewarded. If you were cheating to the downside, you had to cover quit. But anyway, if you waited, you had an entry around 186-ish, and then you had another afternoon entry that took it up to 195. Didn't close in the dead highs, but now let's see if it hovers above this downtrend and then potentially takes out the old high here of 197. Later in the day, guys were looking at LinkedIn, including me. So if you come back to me, we talked about how these two stocks have been pent up and they have been moving somewhat together. And LinkedIn gave you a nice buy, and then it gave you a nice add-on buy, and it extended. I tweeted, let's trim and trail above 180, and I know this didn't close on the highs, which is just a problem in the market. Things don't do exactly what we want, but ultimately closed pretty well. So, if you got involved in this base here and you added through this 78, this was the level 178.38, okay, and you trimmed a little bit to feel good to play the breakout and then held some, it still looks okay. It didn't go nuts, but look at the type of move that it's had. Something to do. Google's still hanging around, nothing ready to go yet. It's holding the 8-day moving average like it did right here before going again, which it's been riding since earnings. So let's see what happens here in the next few sessions. Let's see if it wants to continue to have the 21-day catch up. It's on my radar for another trade. Last night's trade was right around here for me, right in here for the breakout, and now it's slowly coming in. So I just want to make sure that it doesn't have that $1,000 jinx because everyone's upgrading it now, and now it can't go higher. Same way, if you remember, I think we were all buying it right in this, or we were holding it in this 760 area, right around here after it broke this downtrend, and everyone was downgrading it before it went up. So now they're upgrading and it doesn't go up. Yeah, that's just the analyst community. As far as Apple, you had some two-way trades today. Nothing still to write home about. I've talked about this trend, and I've talked about a level versus a level, and here's that little head and shoulders top. That wound up breaking the 21-day right there, which was your way out of that thing. And then along the way, there were other clues that it was going to be that weak. One being this trend. Remember this trend that broke right here? Okay, and then broke below the 200-day. Didn't find the bid, so it wasn't a sell trap. It was actually a real sell. We had that one red dog reversal here that gave you a rally back up to this downtrend. And P.S., this is where we are now. And I definitely tried it on Monday, and it didn't work. I took, it worked intraday, okay, made some decent money there as it closed above this level here. And then yesterday was just gross, okay? And now today gave you a little two-way action, and it's, holding on by a thread here. I guess you could still trade it versus 420, 425, but if this were to give way, you could see another discount. Or I guess the longer it stays here, maybe, which is a big maybe it tries to take out this downtrend that's been controlling. But as of right now, nobody knows. I don't care what anyone says out there. Okay, a lot of people, if you come back to me, I've been calling a bottom in this thing from 600 or accumulating this thing from 500, and that's the kind of game that could put you out of business. Even if you're a hedge fund, we've seen hedge funds get put out of business because of that. So for me, I'm not a huge hedge fund $billion guy. I'm gonna do a level versus a level, and I will stay with the trade if it warrants it. If we have a nice breakout day, closes, holds halfway up, continues, breaks higher, I'll stay with it for multi days if it's there, but it hasn't been there yet. So with that said, another disappointing stock right now has been Facebook. Facebook still can't find any momentum. Okay, and if you look here, this chart, on a macro level, still looks like it's trying to build this, this what's it called, this cup and handle type pattern. And since peaking out on the last quarter's earnings, it's been slowly trending lower. Okay, and it still might not be ready yet. The real trade with size would trigger if it got above 28.68. Right now, I'm still holding some. Some guys on a micro level might have hit out today, and I understand why. Okay, you did have this little ascending channel right here that it broke to the downside. So if you're an active trader and you think you'll get in at some other point, you could have got out today. For me, I'm giving it to this reversal low, but I do have less, and I will wait. It could continue to trigger or just, whatever it's going to do here and dribble down and then break above, but we'll see. At this point, you never know. Here, when it had that little descending channel, it didn't last long. Okay, you had that red dog reversal, boom, was powerful, then it traded through resistance before peaking out. Here, it tried and then failed. What are you going to do? Don't cry about it, just react. A pleasant surprise today, though, is BlackBerry. BlackBerry's been a stock that Sperling's been, trying to time, and he's done a pretty good job at it. Today, looked pretty dead, and then all of a sudden, boom, some news came out saying, they sold 1 million BlackBerries to one large customer or something like that. And more importantly than that, it had a big move, and then it didn't pull in. And for me, who didn't play it all day long, I watched it on the quick move, and I started asking them, like, where did it come from? Where did it come from? And someone's like, it came from 1410. So it didn't matter that for 2 minutes it didn't, continue. It had to absorb it. Then once it stayed there, to me, and I saw the volume, I'm like, game on. It could be a good little active trade. So you go to BlackBerry, and you'll see, right here was the trade that a lot of guys were looking for when it broke this downtrend above this 1370, and then it did pull in a little bit more than people thought, but it did hold 50% of it. But then more importantly today, you look at the news that came out, and it held higher. Okay, let's go to the 3-minute chart. Okay, this was right here. Even 2-minute chart, you'll probably see it a little bit better. What happened here? Stock was dead. Okay, not doing anything. All right, let's put some volume in. Basic studies. I'll show you a little red dog tactics. Okay, boom, igniting bar. No one usually gets involved on this igniting bar because what does it do? It's so fast and furious. The only people that pick it up are news sources and probably algos and computers. But for the seasoned active trader, what you do is you want to see it hold higher, the top third of an igniting bar on volume. So right around here, I got involved in a little bit, probably around 1480. And people started to cry a little bit. Oh my goodness, it came in a little bit. And that's when I said, I'm like, where did it come from? I'm like, oh, if it came from 1410, it's probably gonna have to hang out a little bit. Wound up hanging out a little bit, and then your ad was once it went through the high end of this, what's it called, flag. So tier 1, tier 2, quick move up. You could have sold some, and then it wound up, trending all the way before, closing strong. It was pretty important to know that, this was the prior day high, which it also got above to show some power. But all in all, really, for the active trader who's been watching it here and there, doing nothing with it, boom, igniting bar, volume, held higher, nice bull flag, long sum, continuation, get comfortable, and then boom, look at that trade. So with that said, some people are like, what does it mean? 1 million BlackBerry 10s, who's the customer? At that point, we didn't know. All you knew is that you had an igniting bar, you saw some commitment, you saw some volume, take the trade, and it was a pleasant surprise in the last hour. As far as some other sectors, everything was kind of wishy-washy. A trap today was eBay. That was horrendous. Nice reversal yesterday. It was down 50 cents. I didn't even take it home long yesterday. I'm like, oh, let me take advantage of this. And P.S. eBay just couldn't find a friend. And there's nothing you could really do about that. When you have a few different things you could have done prior is you could have stopped yourself out right here when this engulfing bar took out this entire range. And then another thing you could have done is right here with this a bigger trend line. Once it broke, that's when you could have got out of it. And then yesterday you probably said, okay, look at this nice reversal on some volume. Okay, and then P.S. it engulfed it. There's nothing you could do about it. You know what that's kind of like? I hate to do the comparison, but it's like blackjack. All right, you get pair of eights, versus 7. What are you supposed to do? You're supposed to split them, right? You have to split them. You get 16 versus 7. So you split them, and then all of a sudden you get a 2 and a 3, and you're like, oh my goodness, 10 and 11. I gotta double down. Those are the rules. Here's your 2 blackjack hands to double down against a 7, and then all of a sudden, on the 10 you pull an 8, which you're like, okay, not a bad hand, and then on the other 11 you pull a 7, and you're like 18, like all right, and then all of a sudden the guy, the dealer turns it over. He's got a 3 underneath, pulls a 10, and takes all your money away. That's somewhat of what happened here on this potent day in eBay. Okay, you had a nice setup, reversal after a big pullback, and boom, got engulfed, and either you got yourself stopped out as you saw the weakness, or you said, I'm going to hold my nose and figure it out. But as of right now, it's tough. We'll see what happens tomorrow. Maybe there's another trade here, or we'll use yesterday's low as a pivot. I don't have any overnight, and if you do, it's just you have to be careful, and maybe someone comes down and supports it tomorrow. But basically, same way with the Apple trade. On Monday, even though it's been in a strong downtrend, you finally had a big day, finally closed a little stronger. You made money. The right trade was to take it home long and then figure it out. And it was a good setup that didn't turn out well. And then that's what happens, in high percentage plays. But you have to continue to take those high percentage plays because usually they work out and they're high percentage plays for a reason. So anyway, I think tonight you're going to see headlines again. What are we now up 8 days in a row, even though it was up 3 points in the Dow today or 4, and then I won yesterday. So people are going to be like, oh my goodness, the markets, you must be crushing it. And don't deal with those phone calls or those emails or those texts. Just continue to do what you're doing. There are intraday setups. There are situations to continue to hold, and there are some shorts out there. If you're looking to, be short. So there's something for everyone. There's not something for you if you're going to be frustrated and point fingers at everything that you can't control. The only thing you can control right now, guys, is this: the keyboard. Control it and control your approach. I'll see you in the morning with Brittany. Have a great night.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.